Hey guys, Dave with Moneyology on Markets. Hope everyone is having a great Memorial Day weekend, May 25th and 26th, 2019. I want to salute the service members of the U.S. military, both past and present. Thank you for your service. Thank you for your sacrifice. Our freedom is here because of your service and your sacrifice. Thank you. So I want to take a look at the markets from a weekly perspective to give us a better sense of what's taking place in the overall markets without the short-term noise. Let's take a look. So let's start with the 10-year U.S. Treasury here, as indicated by the TNX. Basically what we're seeing is a breakdown in Treasury yields. We closed the week around 2.324, and we're just very, very close to a pretty nasty breakdown in yields. If this, on the one hand, this is a potential double bottom on momentum with slight positive divergence, but if this RSI breaks below that 30 marker, I think we can see a very nasty drop, possibly all the way to 2.1% on the 10-year Treasury. All indications are that the economy is weakening, and that's obviously potentially a good sign for some, and those who own equities long, that could be a sign for a correction here. This is the 10-year versus the 2-year Treasury. This is the momentum of basically the yield curve. If the 10-year breaks below the 2-year, that's an inverted yield curve, and that's an indicator that a recession is increasingly likely. Right now, we're still in the positive uptrend on yields, but so far this week we had a shooting star, and if this particular trend line breaks, that's my confirmation that recession is likely right around the corner. Not there yet, but definitely something to keep an eye out for. The Wilshire 2500 index, this is one I've been pointing out. We've created some very, very nasty negative divergence. We had basically an inverse head and shoulders, or rather a head and shoulders here, and a bearish wedge in the last shoulder, and we broke below it. And now look at PPO. Momentum is really moving to the downside. If we can hold the 50-week moving average around that 6,800 level, I think, and coinciding with this 50 RSI level, this can get really nasty real quick. It's very possible we'll bounce here. 50 RSI often serves as strong support, but if it breaks below it, look out. Gold, on the other hand, is finding support on. I closed the week above its 50 and 200 week moving averages, and it's closed the week right above 50 RSI. So it's setting up, in my opinion, for a very nice run that could finally see it close above that 1340 level, but it needs to break above this particular uptrend that it broke below. So gold's got some work to do, but it's moving in the right direction. There's definitely some positive signs in that space. Here are the high yields. So the junk bonds have had 3 straight weeks of negative returns after breaking below this bearish wedge. We broke below the 61 RSI level, and now really the next support here is at the 50 RSI. So I think there's going to be some increased weakness now that we're below that RSI level, the 61 RSI level, and there's really not much support until you get to that 105 level on the J and K. And look at PPO, it looks like it wants to curl below zero. That's definitely a bearish sign. Likewise, housing had this very, very nice run from 227 all the way to 316, the housing index. But notice this is the 69.70 level of RSI, which is a crucial Fibonacci support resistance zone, and we couldn't break above it. And that's no surprise that we found resistance here, and we broke below it. Not coincidentally, the last time we broke below it here is when we saw this massive correction here back in February. So that's exactly where we found resistance this time around, and now it looks like the next point of resistance is that 50 RSI level. It coincides with that 287 area. Let's see what happens once we get there, but that's still some pretty big downside left before there's going to be some solid support. Crude oil likewise broke below the 50 RSI, broke below the bearish wedge, broke below the 50 and 200 week moving averages. I think that we're going to see at least 55 at some point, possibly as early as this week, possibly go as low as 50 or even as low as 45 in this particular move down. Now, the NASDAQ is interesting because it broke down this bearish wedge here, and after 3 straight down weeks, it's at a level where you might find a nice bounce. It coincides with the backtest level and the 50 RSI. So let's see if this can hold, and if it doesn't even have a dead cat bounce, then this is a sign that the markets certainly want to move lower. Here's the equal weighted Nasdaq. This one's breaking below support right now, so definitely close below 50. If it can't hold and recapture that 50 RSI level, look out below. Now PPO is now below 0, so I think the probability is that markets are moving to the downside. Russell 2000 small caps had a fake breakout to the upside and closed below it. And I think that the small caps are leading the markets lower. These guys are the ones that tend to be the best barometer on what's actually taking place in the overall economy, and it's not looking good right now. A couple more names. Here's the equal weighted S&P 500, and this one basically takes away the top heavy performance of Apple, Facebook, Google, and so on, and makes every one of these companies equal, and it shows that the markets are barely struggling to maintain their momentum. We broke out here, but we broke below it very quickly. That's a fake breakout with definitely with negative divergence, and we cannot hold these new highs. And now it looks like we want to move lower. If that 50 level can hold, lower prices will soon follow. S&P 500, SPX, head and shoulders, we hit new highs. Basically double topped here, but again, negative divergence with each consecutive high. That's something that we saw in 2007. I am not trying to say that 2007 is around the corner, but definitely markets do correct, and when they do correct, they often resemble past corrections, and this one it looks like it's setting up for something pretty interesting. Here's the S&P regional banking index. These guys are holding up okay, and that's actually a surprise. But if it breaks below the 200-week moving average, then we're going to see some additional downside in the regional banks. Semiconductors, they've been absolutely awful after this very nice run. Looks like we're closed below a 50-week moving average that's curling to the downside. I think the next obvious target is that 1100 area around the 200-week moving average, which would effectively be a double bottom to the December lows, but PPO is firmly now below 0. Here's the total stock market index, and this one's been acting the strongest effectively. So emerging markets are still holding on, but I don't know for how much longer, especially with the US dollar having performed fairly well. It's been very tough for the emerging markets, but this 143 level, if that breaks, look out below. Transportation, this one's the Dow transports are breaking down, negative divergence, head and shoulders. There's probably the next target is that 9,500 level on the Dow transports. The US dollar, this one is something that I've been charting and writing about for a while now, and whereas so many people I'm seeing on Twitter are still very bullish on the dollar, what I'm seeing is a bearish wedge setting up with negative momentum, and I think that this one ultimately resolves to the downside, but anything's possible, and I remain open to new perspectives depending on what price does. Volatility is definitely setting up for a move to the upside. You see it's closed firmly above 0 on the PPO, and it needs to break above this 18 level, but it closed the week above 50, so I think we're going to see some fireworks, certainly in volatility in the next couple of weeks. Wilshire 5000, again, same type of dynamic, negative divergence, head and shoulders, breakdown of this bearish wedge. Here's the world index without the US, and we had this nice breakout. Now, is this just a back test, or is this something greater? Again, close the week below the 50 RSI. It's not a positive sign. I think we're going to be retesting at some point those December lows. And that's it, guys, for the weekend market review. If there's any other chart or sector that you want me to cover in these sort of reviews, please shoot us a note in the comments on the YouTube channel. and I appreciate your support. We're going to be launching our website here in the next couple of months. That's going to have premium content, and we're very excited about that. We're opening this particular service up to only 100 subscribers, and right now we've got 45 folks that have committed. And if you want to be a part of it, please send us a note at dave@moneyology.com. Feel free to check out more of our videos on uranium, precious metals. We look forward to covering copper, energy, shipping, and other names in the not too distant future. Appreciate your support, and have yourself a great week.